Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having a fantastic and amazing day. Happy Saturday to you. We're taking a look here at Sandbox again once more. It's been a little while since I'd covered this. Obviously, we got to update some Fibonacci levels and kind of extend out those previous support levels and kind of see roughly where we're lining up now. I'm willing to speculate that they're fairly well in line within that range. So we'll take a look at that and much more. Of course, just know too, the traditional markets had actually done very well yesterday. So a lot of alts today and yesterday kind of surged a little bit, so it's nice to see some recovery. So we're going to find out if this is hopefully sustainable or just generally speaking what it looks like, because we want to kind of make sure that we get perspective on some of those things, okay? So if you are new to the channel, just know I'm not a financial advisor. I do love teaching people to trade. I hope you can learn something here today. If you do learn something, of course, feel free to become a better trader. CryptoCache.tech is a site linked down below where you can register to become a better trader. I have a trading community, academy, and signal groups where I essentially send out signals for all of my trades that I take. We took some healthy profits here recently, 42% from Ethereum, 50% from BNB. That was a couple days ago. Keep in mind, the opportunities aren't significantly there right now. The market doesn't have a tremendous amount of signal opportunities, but 82% in 15 days, I'll take that any day. More important, 195% from Solana in 3 days. So these are things that still very well happen. It's just a matter of, how often it occurs, right? So opportunities do occur a little less frequently than normal based on the bear market that we're in, but we do have a significantly beneficial bear market strategy. We got some awesome traders in the community too. Majority of them are using Bitget as an exchange as well. So in regard to that, just so you know, I have your back. We have a $10,000 prize pool monthly. All you have to do is use the link in the registration down below, essentially, to register, and you automatically qualify for that. If you are using Bitget already, feel free to send me over your user ID so I can include you in that. It's really simple, very straightforward, no sweat. Furthermore, too, if you are in the States or in a restricted country, every exchange has a VPN requirement, and you may as well get 3 months extra free with the best Express VPN in the world, right? So me personally, ExpressVPN has been fantastic. I've used them for years, so it's awesome to be partnered with them. Thank you so much, Express, for allowing me to benefit my community that way. So let's take a look here. What do you know? Look at these. I drew these out. These were previous ones from previous support and resistance levels, okay? So what that does, that kind of shows us that we bounced perfectly right off of this previous support at 37.5 cents. And then, of course, we have a strong resistance level at about 57 cents. So let's make sure we take a quick look at that and see kind of what that implies and just kind of go from there. So we'll draw this out here as well, kind of pull that out right to that level and kind of zoom in and see. So here's basically where we're at. We got a strong resistance channel between 0.618 and 0.786. That's a very common characteristic in trading. So just know that when the price comes back up here to 54 cents, we're probably going to see some resistance, okay? There's just no other way around it. Furthermore, if we take a look, of course, at some other areas here as well, we can kind of see that the price bounced off Fibonacci here at 0.382. That's an initial rejection point. So that pretty much just implies that we're likely to be range bound in this area here if it doesn't continue further higher. That being said, what we want to do is take a quick look at some other key indicators to identify what that means. 50 on the RSI, first of all, is a resistance level. This is telling us that, hey, the price came up to that level and got rejected at 47.5 cents. So we should anticipate that being somewhat of a resistance level. Okay, now it's not like super strong. There's a few days here that, of course, held in place. But generally speaking, that's essentially what we're looking at. Okay, so again, that's going to be a resistance level, and the 50 on the RSI is confirming that. Until you get above 50 on the RSI, there's no reason to want to take a long position. And I say that just because you have a lot of resistances above us. Now, again, if we take a look at simple moving averages, you can see here that we are above the 20-day SMA, which is concurrent in most cases with a descending trend. So in that regard, we are breaking bullish. We're just not confirming bullish yet, if that makes sense, right? So we're breaking above that resistance level. There's a stronger chance we will see further upside with this convergence on the MACD as well. But once again, not fully confirmed. If we get a confirmation today above 50 on the RSI, I'd feel much more comfortable in taking a trade there. Just keep in mind, that's kind of where we're at there for Sandbox on the daily. So the daily looks actually fairly favorable. On the 4 hour, we can see this other rejection point here as well, the 200-day SMA working its way down. No coincidence there at 0.382, we're seeing that resistance. Okay, so keep in mind, again, we're above some nice key level supports, but we're also below a resistance level that will and should continue to maintain itself. So if I were to take a trade, for example, I like to take multiple entries. If you're a part of my community, you'd already know this. I like to take multiple entries and essentially get in twice. So the first one kind of averaged itself up at 45 cents as a rough estimate. Then a second entry somewhere in the range of 44 cents, right? Something like that would be more sensible because the likelihood of a pullback is greater, but the likelihood of a bounce off this level is higher because of the way that it spent some time here previously, okay? So it finally broke through its resistance level and we're looking, more free to continue higher, right? So again, that's kind of what we're looking at there. And if we take a look, of course, at, the RSI, we can see here that we are tapering off, coming back down below 70. Anytime you see RSI over 70 on the 4 hour, it's got it's a very temporary thing, okay? So it's not super likely or common for the price to stay above that unless we're in a bullish scenario, like a bullish type of environment. Last year, of course, the year before, different story altogether, but in bearish timeframes, you got to respect 70 on the RSI, and that's likely pushing the price action down here, okay? So again, that's just kind of what we're looking at there, something that's absolutely worth understanding. And the fact that we're under 70 now, we want to get closer to 50, that could put us right here at this range and get a nice perfect bounce. So to me, it would make more sense to wait a little bit longer before taking a trade, but if you were to jump in now, take a trade right where it's at, and then of course when the price action comes down a little bit lower as well. 2 entries would be perfect. Again, those are just ways that I like to trade, and those are ways that I stay successful, honestly, because there's nothing better than getting your second entry filled and the price hitting the target, but it's equally as beneficial if you hit your target without getting filled that second time. While it's a smaller position size, it's still safer and more effective. Okay, so again, it's kind of a win-win on all fronts. To me personally, I really do like it. So I'm sure you're rolling your eyes right now if you are a community member because you know darn well what that looks like. All right, so here's kind of where we're at here for the hourly. Let's go ahead and take a quick look at TD sequential and see. We have an overextension. In fact, we forgot to look at that on the 4 hour. Just to quickly note, with Sandbox, it's hitting 9s, consolidating up to a 6, down to a 7, now we're up to a 6 again. So it's not overextending itself by any stretch. So this is a very healthy continuation. We like to see that. If we see here as well, we can see we hit a 9 with no consolidation with a strong push upwards. This was likely some type of either fundamental catalyst and or just shorts hedging their longs. As soon as the price breaks this resistance level, it continues higher, they close their shorts, they open longs, and it goes upwards. Okay, it's that whole buy and sell, supply and demand situation. That being said, it's overextended to the upside for sure, but it has had a chance, almost 8 hours now, of consolidation to the side and down, okay? So that really tells us that there is a potential for a further leg up here in this continuation to retest that level. And if we kind of take a look here as well, it's not the prettiest, but you can see somewhat of a cup and handle pattern potentially forming, okay? Again, they're never exact, they're never precise, but oftentimes it comes up to the point where there's a specific level retested and then it breaks through the second time. So we've had one attempt here so far. Perhaps that second attempt is in the near future. Okay. So again, most everything that we've looked at so far is favorable. We've got probably a 70% probability of the price continuing upwards. The last one we want to take a look at is, of course, my favorite indicator, Ichimoku cloud. So with Ichimoku, what this is basically telling us here is that lag and span is soon intersect with the price action. Therefore, if you have a long position open, you may want to consider trimming it or closing it. That's essentially what it's telling us. Again, pay attention for the next 8 hours. A lot can change in that time frame, but that's generally what we're looking at. We do have a lot of momentum to the upside here, so it does imply we could see further upside as well, which is good. And if the price were to come down and retrace, we could likely see a bounce off of the cloud at this level. So the bottom line that we're looking at here is that further upside seems much more probable than downside. But it also seems likely that the price may pull back a little bit more before it comes back up. But the great news is we have a nice support level here at about 44 cents. I'm just kind of rounding up, that's pretty close to it, because we can see that 44 cents posed a resistance level, right? You can see that. So if the price were to come back down, that same level should essentially be a bouncing point. Okay, so hypothetically at this point, the price continues higher and we retest this resistance level right around 47 cents. Worst case scenario, the price comes down a bounce, you get filled at a lower average price at 44 and the price comes up. Okay, both are win-wins in my opinion. There's no real reason for this to want to kind of just die off and come down though, because again, we've got a lot of previous support levels that are really helping us understand that we're pretty safe in this regard. I mean, heaven forbid the price were to come down to that level, that's a pretty significant decrease, but it's absolutely a support range that we need to be mindful of, okay? So for the most part, Sandbox is looking fairly healthy. I don't see any problems with this per se. This continuation should continue, but we got to recognize that it probably could pull back. And just one last little observation here. If you see this here comes up for consolidation, comes up to get rejected at this previous resistance level, comes down, bounces off the exact previous resistance level, and comes upwards. Okay. If we were to mirror that right now, we could see the very similar circumstance, okay, where the price action comes up and then it comes back down to bounce off this level, again, another previous resistance level, turns support, and continues higher. Okay, so there's a stronger likelihood if the price were to come back down, we will see a bounce off 44. Okay, just keep that in mind. All right, that's kind of what we're looking at there. I hope that made sense and that was clear and concise. Thank you so much for joining me here. Of course, if you want to, again, become a better trader, CryptoCache.tech is a site. I pretty much work with my community. We all learn and grow together. It's a phenomenal experience. And we've got a lot of members coming over right now to lock in their rate before rates do adjust at the end of the month. We have a new website coming out with some awesome features, so really cannot wait for that. I hope you have a great rest of your day. Thanks again for your time. We'll see you in the next one. Take care.